Isn't that fascinating? As if the crypto market was preparing for Christmas. Everything gets decorated in red, but of course it's not the ideal Christmas present. Or is it? Does it make sense to buy this dip now? Is this actually our opportunity? Of course, today doesn't look great. And this week doesn't look that much better either. But is this maybe a fire sale? Are we simply getting 25% off for buying Arrow or for buying Bonk or for Floki, Ino or Dog with Head, etc.? Pretty much everything is down. Now it seems like especially the Solana ecosystem has a problem because Solana as a fraction of all of crypto, so in terms of market cap, went down by 25% within the last month. So on the 18th of November, we had almost 4% of all of crypto being Solana. Now it's less than 3%. And we have discussed this in more detail in a dedicated video. The TLDR is that the pump.fun ecosystem tends to now shrink. The number of newly deployed transactions is going down in the last month. And with pump.fun being a very large part of the Solana ecosystem, seeing less activity on the meme coin launchpad is bad for SOL. But I don't want to repeat the video. I've done a dedicated video on Solana 2 days ago, so feel free to check that out. It's called Buy the Solana Dip. It's 16 minutes discussing Solana in particular. But in this video, I want to talk about the altcoin market in general. I want to talk about altcoin season. I want to talk about how much altcoins can further fall potentially and how much they could potentially outperform the rest of crypto. Now there's a very interesting metric to measure this. It's the others dominance. So instead of looking at the Solana dominance, we look at the others dominance. This measures the market cap of all of the altcoins that are not in the top 10. And this chart starts in 2014, where the others dominance was less than 1%, and it goes all the way to today, where we are at around 10%. And so initially, it seems like we have seen a lot of adoption, right? This was an adoption wave. And now we seem to be consolidating somewhat. Of course, there are altcoin seasons and altcoin depressions, but we're not going to grow by another 10 percentage points within just a few months anymore. It's unlikely. And so a long-term chart that sees a lot of adoption at the beginning, where we now see less growth in the future. We've seen this before, right? We've seen this over here. This is the long-term Bitcoin chart. So this is not a dominance chart, but a US dollar denominated chart. And of course, initially, we had very, very quick relative gains. And now the growth slows down somewhat, right? Now we can't grow as quickly anymore because now Bitcoin is way larger, relatively speaking. It takes now much more capital to move Bitcoin's price. And so what's interesting about this chart is how nicely Bitcoin is trading in a range. So with a random curved line, we're simply just drawing on the chart, we can connect the bottoms of the Bitcoin price historically very, very well. It seems like Bitcoin tends to bottom out at similar levels. And if you look at the current potential bottom, right, how much could we potentially go down if things suddenly start to implode? Maybe because there's another financial crisis, whatever it is. How far in that case could we drop? The answer is, if history is any indication, more than 60% down to 37K. I don't believe this will happen, right? I do believe it's more likely that we're going sideways from here and that as a result, we will approach the floor automatically with time. But it's always interesting to see how volatile Bitcoin actually is, right? We tend to forget this when we move from 16K to 100K, and then we think maybe Bitcoin can fall just another 10 or 20K. That's actually not the case. Historically, we have seen way more volatility. Now for Bitcoin, we can do the exact same exercise for the price tops, right? Again, we just take a random curved line, we draw this on the chart, and through magic, the tops tend to be aligning very, very well. Unfortunately, with that trading range estimation, we are not very low anymore. The upper ceiling is at around 18K. So the potential risk is very high. The potential reward isn't that great. But again, nothing about this is scientific. It's probably not the best approach to ride the cycles, but still, it does give us some kind of a hint where it might make sense to take some chips off the table in case you're totally over allocated. But again, I don't want to talk about Bitcoin here. I want to talk about alt season. Let's go back to the others dominance chart. So how much of all of crypto is in the altcoins that are not in the top 10? And we can try a very similar exercise to what we've just done with Bitcoin. Now the Bitcoin chart has much more history, and so the tops tops and the bottoms do align very well. The alignment isn't that great for this chart, but still we can attempt. And let's start with the bottom. So how about this? Yes, we don't have the very early days in here, but still, if we include the daily volatility as well, we've got 1, 2, 3, 4, 5, 6 bottoms that all align pretty well on one single line. Now we can also try to do the same for the tops. Probably for the tops it doesn't work out that well. How about we simply take a copy of that line and we try to again get somewhat of an alignment. And yes, it's not perfect. We've got a huge outlier over here and we are overshooting over here, but still with a bit of fantasy we've got 1, 2, 3, 4, 5 data points for this line. Let's accept more that those here are outliers and align a bit more for the recent past, so maybe something like this. Then we can come to an estimation of what currently the risk versus reward for the alts is. So the same exercise that we have done with Bitcoin, we now do it for the alts. This would imply that the altcoins could go down relative to the rest of crypto by maybe another 15%, and that the upside of alts as a whole versus the rest of crypto is 116%. So again, nothing about this is scientific, right? But it kind of makes sense. At the beginning, we've seen the adoption of alts. Then we now see sometimes the rotations. People want to buy Bitcoin or want to buy alts, and we tend to be somewhat in a range. And of course, figuring out the perfect bottoms and perfect tops isn't perfect, but this does give us an idea that buying altcoins now and holding them maybe over the next year might be a better option compared to buying Bitcoin now and holding that over the next year. Bitcoin might already be somewhat heated. And just have a look at what happened historically when Bitcoin was heated. Let's say over here, right? This is a similar point in time. We were not yet at the top, but we were pretty close to the top. We didn't have that much more upside, but plenty of downside, and we just came from a nice little rally, similar to how we are currently coming from a nice rally. At the beginning of January of 2021, that was when the others' dominance hit the floor. And that's then when the altcoins in aggregate outperformed the rest of crypto by 192%, so roughly a 3x. This was a real altcoin season. The beginning of 2021 was a real altcoin season. Now here's the thing, there are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcoinstrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.